Now that we have relocated ourselves into practice, let me explain a few things. This is a TradingView website or the platform. We mentioned that earlier. And I am looking at Bitcoin USDT on Binance, which I chose. This is the pair I chose. Before I move forward, I would like to talk about some orders. There are various types of orders, but for us, market orders and limit orders are of particular interest. So what's the difference? Market orders are the orders a buyer or seller puts instantaneously in the market at the price which is currently moving. Let's, for example, look at Bitcoin at the moment. The price is 108.512. So 108,512 pounds at the moment. If I were to buy a Bitcoin at market orders, this would be the price I would buy immediately. There is a downside to it. Despite putting orders instantaneously, if you look at the trade history, there will be some discrepancy in the order you put and the actual price you paid, and that's what we call slippage. When it comes to limit orders, these are the orders which we put at the price we want to receive, and the order is fulfilled only when the price meets that criteria. So if I switch to, for example, Binance website, right? This is a web application of the Binance, and I believe this is the, let's have a look. This is again Bitcoin USDT price, except this is a monthly chart. I can switch it to daily charts. Let's have a look. And you can see here again the price is 108.512. So at the bottom of this page, you can see I can choose to buy market, and the price would be the current price. In USDT, I just need to choose how many Bitcoins I can buy, or fractions of it, depending on the money I own. If I put limit, or if I choose limit, and by the way, I'm looking at the spot trading, I am not going to look at any futures or any leverage-based tradings. So if I change the spot trading into limit, then I can define the price I want to pay, the amount I want to buy, and then put the buy order. The buying order will only be fulfilled when the price reaches the price I want to buy. For example, at the moment it's 108k, but I want to put 106. Okay, something along those lines. The order will be fulfilled when the price goes down, if it goes down. Now, Coinbase, I wanted just to have a brief mentioning of this. Coinbase, as it is stands, you can see you can fulfill or buy orders, very simple orders, where you buy an instrument, in this case maybe Bitcoin. You can see it on the right hand side by defining how much British pounds I am willing to spend, and I just buy. However, if you're on the left hand side, this is a web application. When you flip to advanced version of Coinbase, you'll come across onto the platform which looks very much like a TradingView, and in here then you can choose what kind of order, if you look on the right hand side, what kind of order you want to put with its limit, and then you again consider the slippages or consider the price changes, the amount you're happy to spend, and the pair here I've chosen is Bitcoin USDC, or you can use Bitcoin USDT. Right, and I can change my order from limit if I want to define the price I'm happy to pay, or the market, and then I'll just buy at whatever price is at the moment ongoing. Now going back to the TradingView, we've just looked at market orders and limit orders. Why is this important? And how we're going to define the levels we're interested in. The simple way for now is going to be, you look at the market trend, and I'm looking at the daily chart, so every bar represents a day. And if I come to one of them, you will see at the bottom, this is Tuesday, 27th of February 2024. Right, so we're looking at last year's chart. We tend to look at the trend going upwards, and then we see the trend stopping or trend reversal happening. Right, this is where we could actually start putting a right, or I may actually try to bring it down or move around so I can see what's happening. This is one of the levels, and it's not very precise at the moment, but we can see that this is the place where the price was going up and then it stopped, and then you see the change in the trend, i.e. it's not necessarily going down, but rather it's ranging in this particular channel. I can also put another level. Maybe somewhere here. and I'll explain why I think I want to put that level there. In an ideal scenario, I actually want to see maybe a broader time frame, not just daily, but maybe go back in a few more months or weekly and see where this level actually originated. What it means is you can see that the price starts ranging, that's what we call it, horizontally or sideways, hitting the top level and then hitting the bottom level, hitting the top sometimes and hitting the bottom level. Right. We would consider these two levels, the top being the resistance level and the bottom being support, i.e. when the price reaches the top, it hits and then it reverses going down, and then it tries to hit that same level again and then it reverses. You can see this touching twice, and sometimes you'll see touching 3 times or more. The more times it touches, you could think that this level is actually fairly strong, but there is also an additional information. The more times it tries to touch and hit, then it will try to break, and eventually this level will be broken, like you can see this particular rise going upwards. In a similar way, when the price starts falling down, it touches a particular level and then reverses up. It tries to touch again and break, however it goes up again. What we're looking at these levels is actually limit orders, large limit orders, and the market orders are trying to break through those limit orders. For example, a very large order, call it 200k for example, was put at this particular level to be sold or to be bought, depending how the market maker is trying to make money, right? So market orders or smaller buyers like ourselves might be trying to buy some shares or some stock of Bitcoin versus USDT. As soon as they reach this potential level, their orders can be fulfilled. Let's call it 50k worth, but the market maker put there an order of 200k, so the buyers could not break that level and they just went reversing. Then they try to attempt again and etc. So running ahead of time, to which we will eventually come back again. When the market starts ranging like that, this is the time we may call it's consolidating, or the market maker or the whales, what we call, are accumulating more stock in here, and eventually once it breaks, it may rise really high, right? So the market currently is ranging, it's accumulating, and then accumulating energy to rise above. This is how we look at it. And as you can see here we see a global, what I would call a global level of resistance, the top line here, and then a global level of support at the bottom. Just a quick additional note. The levels of resistance or levels of support are mainly represented by limit orders of a market maker. I did mention that this ranging going up and down, having this buy sell bars represented by market orders as well as limit orders of the smaller buyers or individual buyers. However, the market itself is regulated usually by market makers. They will, despite putting large orders up in the resistance section and the support section, they will also be buying and selling themselves in this little range. And this is why we look for these strong levels defined by market makers. Very often, if you see this large bar, this is where very often institutions enter into the market, driving the market up and down. So the concept of the strategy I'm going for is to actually identify where the market makers put their limit orders, and then how they're managing moving the market up and down themselves, market makers, not necessarily the small individual buyers like ourselves. And the purpose is to identify those levels and then try to predict their next move. That's the whole idea and the whole concept of the identifying the levels, the way we put our strategies initially.